Hello and welcome to BQ Prime. You're joining us on this special broadcast where we are discussing Bank of India's first quarter results. We have with us Mr. Rajneesh Karnatak, the MD and CEO of Bank of India. Welcome, sir. The first question I want to ask you, this more than doubling of your net profit at about 1,551 crore. I just wanted to get a sense as to what is contributing to this number.
Yeah, so with Bank of India Q1, we had a very good quarter. As far as the top line is concerned, we touched the figure of 12 lakh crore of total business for the first time in the history of Bank of India. Similarly, on the bottom line side also, we touched the net profit figure of 1,551 crore, again for the first time in a quarter. So the background of it is our improvement in the net interest income which has taken place, our improvement in the net interest margin, our improvement in the cost to income ratio, and then finally the better operating profit and also the net profit which has grown by 172% on a year-on-year basis.
Okay, coming to the net interest income part, now that's grown about 45%, stands about 5,900 odd crore. I wanted to get a sense from you, is this largely because of the upswing in the interest rate? The part of your portfolio was probably repricing and that's why you're getting the higher net interest income?
Yeah, so we have taken a conscious decision in Bank of India that we will be doing only business which is making commercial sense. So we have left some of the transaction during the quarter in which the pricing was very fine, typically in the AAA rated corporate accounts. So we are very conscious that whatever business we do on the asset and liability side, that makes some commercial sense to the bank. As far as the pricing is concerned, we have improved our cost also because of the fact that we have 44% of our book in CASA book and our bulk deposit is only 11 to 12%. So 88% of our liability side franchise is all retail, either it is retail term deposit or CASA. So that is the strength of the bank. Apart from that, we have also improved our yield on advances, which has improved, and our cost of funds, though it has gone up, but it has not gone up to the extent the which improvement is there in the yield on advances, because of which the NIM have improved and also the net interest income has improved.
Your NIM is up about 49 basis points year on year. Is this the peak now on the NIM front, or do you see some more upswing in the coming quarters?
So as far as our NIM is concerned, we have closed Q1 at 3.03%. And for the guidance sake for March 24, we plan to maintain it at the 3% level for the simple reason that the cost of deposit will be going higher in the next coming 2 quarters for September and December. And we'll be able to protect our NIM by better advances, by improvement in the yield on advances. So we are giving a guidance of 3% around NIM for FY24.
Okay, sir. Coming to the advances side of the portfolio there, you've shown about 8%, on a global level as well as domestically. I wanted to get a sense as other banks are all growing at mid-teens now. Is there a specific reason that this is not happening? You mentioned in corporate you're willing to let go of some business because the pricing is too fine. But on the retail front, what is happening?
So on the commercial sense, I have already given you an idea what we are planning to do. So top line is important for us. However, the bottom line is even more important. So we are more concentrating on the operating profit and the efficiency parameters and finally the net profit. Having said that, our guidance for credit growth of 11 to 12% for March 24 continues with the simple thing that if you see our domestic book, it has grown by more than 10%. If you see the retail book, it has grown by more than 10%. If you see our otherwise in the corporate book itself, if you see that there is a reduction in our state government advances to the tune of 15% year on year. So that is again a conscious decision we have taken to prune down our state government advances. So as far as the pipeline is concerned, we have a very healthy pipeline of around 40,000 crores corporate book pipeline. And as far as the sanctions are concerned, so for in this calendar year, we have already given a sanction to the tune of nearly 30,000 crores. With all this thing in background, I am very comfortable and very sure that our estimated number of 11 to 12% of credit growth will be achieved.
This 40,000 crore pipeline that you're discussing, is that largely on the project finance side, or do you have a lot of working capital commitments as well?
So if you see the segmentation side, it is combining both of term loans. Some of them are short-term loans also, and also working capital, as you rightly said. And it is also diversified across the sectors. There is infrastructure sector, there is industry, there are some NBFC also in it. So in the industry also, you will have steel, chemicals, textiles, pharmaceuticals, and other warehousing and other kind of industries are also there. So it's quite well spread off.
Okay. Interestingly, during the quarter, I think the growth was largely on the metal front as well as some of the other smaller sectors. I wanted to get a sense from you as to firstly why that is and what is going to drive the credit growth going ahead.
So if you see on the economy side, a lot of attraction is there in the cement companies and the steel companies, metal companies. So that is also flowing into our balance sheet. Steel companies are doing quite well. So there has been an increase in advance to the steel companies because there is robust growth as far as their top lines are concerned. So that is the reason why the metal percentage on year basis has grown.
Okay. And what is going to drive the growth, you said?
So drive the growth is totally agnostic. See, it will be across the sectors. There will be growth from RAM sector. We have consciously put our estimation for March 24. 55% of the book will be RAM book and 45% would be the corporate book. Within the corporate book, we want to grow through infrastructure, which is power sector, through roads, and some of the transactions in ports are also coming. And then in the industry side, we have steel is there, textile is there, pharmaceutical is there, agro industries are there.
Right.
So these are the kinds of proposals and pipelines we are having on hand, apart from a few NBFCs.
Okay. The other question I had was on the liabilities front. Now, there, of course, 8% growth is still better than a lot of other peers that you have. But still, as the competition for customer deposits, retail deposits grows, how are you going to tackle this? How do you intend to keep your growth going?
Yeah, we have a very strong retail franchise. We have 5,100 branches. We have a customer base of nearly 11 crores. And our CASA percentage, 44%, is one of the good numbers in the industry. Apart from that, as I told you, that our bulk deposit is only 12%. Our retail term deposit is 88%. And with this kind of franchise and the growing CASA share which we have, on a year-on-year basis, just to give you a number, we have closed our CASA with a growth of 18,000 crore year-on-year. So that is a healthy CASA growth as far as the industry is concerned. So we are very confident with our strong retail franchise and also our NRI book. And we have recently opened some NRI branches also. We have also recently opened the NRI call center also. With all these strategies in place, we are very confident that our credit growth will not be an issue as far as the resources mobilization is concerned from the liability side.
Okay. Gross NPA front as well, you've shown significant improvement, 6.67 versus 7.31 on a quarter-on-quarter basis. I wanted to get a sense of what the outlook for the rest of the year looks like. Is there a target you're aiming by FY24?
Yes. So as far as the gross NPA is concerned, we have improved our gross NPA. Net NPA has also come down substantially on a year-on-year basis. So our guidance for March 24 is to be below 6%. Certainly, it should be below 6% for March 24, as we will be seeing a better slippage ratio, the improvement in the slippage ratio, and credit cost will also get improved.
Okay. I want to talk to you about the current status of banking in this country. There's a few large public sector banks such as yourself who have a certain amount of market, but in terms of growth, it's only a couple of names that show that high growth number. Rest of them are still in the medium growth segment. I just wanted to get a sense to how do you see business going ahead? Do you think that there's enough for banks like Bank of India to really grow in the teens at some point in time?
Yeah, definitely. So we have given a guidance of 11 to 12% of credit growth and 10 to 11% of deposit growth. So that is the guidance we have given. That is a conservative number. Definitely, we'll be able to achieve it. With our strong franchise, as I said, of 5,100 branches, we have a strong global presence also. We have a total global book of around 16% of our total book. That is another step for the Bank of India as we are concerned. Apart from that, you are well aware that the economic growth is also there. The GDP data is also coming better. If you compare to other countries, India's GDP data of 6.5% estimates is a healthy number. GST numbers are also coming good. So presently we are having a market share of around 3% in the total book scheduled commercial banks. And definitely we will be able to maintain our market share and grow in March 24.
Okay. Lastly, I wanted to tackle this question of recovery, sir. To your mind, what is the recovery target going to look like for FY24? And I want you to also tell me a little bit about how you are dealing with NARCL.
So as far as the recovery is concerned, we have given a very healthy estimate of 12,000 crore during the year. So we want to do a recovery of around 3,000 crore per quarter, so total of around 12,000 crore during the year. That is our estimate. Against the backdrop of a fresh slippage, we want to contain within 8,000 crore. So that our overall, as I told you, our guidance of keeping our gross NPA within 6% for FY24. Right. So that is one on the side of recovery. As far as NARCL is concerned, we have presently having 3 transactions which are approximately around 600 crores, which we presume to get consummated during the coming ensuing quarter of September.
All right. Thank you so much, Mr. Karnatak, for joining us on this conversation.
Thank you so much. Thank you.